GM, good morning. Welcome to the Milk Road Show, the daily crypto show that's as enlightening as finally understanding the offside rule while watching the Euro Cup soccer. I'm your host, Jay Hamilton, and today we're talking about the top 5 blockchains in 2024. Why? Well, because we're halfway through the year and we wanted to see if the narratives we're seeing online and in the media match the actual number of users and volume. And in order to do this, we're going to be reviewing 5 essential charts that every crypto investor should be looking at a regular basis. So if you're watching on YouTube or Spotify, great. If you're listening, don't worry, we'll explain each chart for you as we go. Here to guide us is Milk Road co-owner and head of research, Kyle Reidhead.
Jay, welcome back. Welcome back from the big bachelor party.
Big bachelor party. It's good to be back. I got the energy. Don't worry. I had an extra day to sleep and rest up. Right. New York's a crazy city. What a party. What fun. But that's not the topic of today. Let's talk about these 5 charts and why they matter so much. Kyle, let me just ask this first question. Why is it important for investors to understand the actual numbers behind blockchains? How does this give them an edge in their investments?
I mean, it's funny. It shouldn't really give you an edge because it's all public information and it's so easy to look at, but most people just actually don't. And so you have a lot of investors, mainly retail, who just kind of invest based off narratives. And the problem is that a lot of times in this space, narratives can get spun, especially when you're talking about media or social media. People can change it, or narratives change, and maybe you haven't caught up to speed yet. And so you might hear that this is the fastest and the best blockchain, or the blockchain with most liquidity. And then things can change in a matter of weeks to months. And so the beauty of blockchain is you can just look on chain and you can get all the metrics you need right there. In the tech world, in the normal world, the TradFi world, you can't really do that. You have to wait for quarterly reports from the business themselves and trust their data. But on chain, we can look live anytime we want. And that's pretty cool.
And when we look at these numbers of the past 6-7 months now, basically, what is it that you're looking for when you're looking at numbers over a 6-month horizon, as opposed to looking at numbers on more of like a weekly or monthly horizon, which is typically what we tend to do more often?
Yeah, you really just looking for trends, right? What's the changing trends in terms of, is there a certain blockchain that's all of a sudden doing really well in a number of metrics? And ideally it's a bunch of metrics. Then you're like, okay, something is going on there. You might want to look further into that. Or you're like, wait a minute, why is that number so? Is that actually true? Because you also got to remember that a lot of these metrics chains can manipulate. Now, in the biggest ones like Bitcoin and things like that, like we're probably not able to manipulate much. But when you look at numbers of like top metrics on layer 2s, a lot of those things are getting manipulated, whether it's like in a bad way, which is actually like running a bot to like make it look like you have more users than you actually do, or it's just incentive mechanisms. And like, yeah, it's got a bunch of users or a bunch of liquidity, but it's not real and it's not sustainable. And so when you look at these metrics, you also have to kind of understand the background of them, which we'll talk about as we go through each one here. And so hopefully that'll help you understand how to like analyze these as well. Because sometimes the data you see is not always true.
And we're here to give you the truth, the delicious milk to make your investments flourish. Let's start off by looking at monthly active users. So I've got the monthly active users chart up on screen of 2024 year to date. The top 5 chains as of today are Solana and Tron, almost exactly the same, 14.3 million each. BNB chain, 12 million. Polygon, 10.3 million. And Bitcoin, 7.7 million monthly active users. Kai, when you look at this chart of monthly active users, what are you thinking about? What are you noticing?
So a few things. So first of all, monthly active users is wrong. These are monthly active wallets. These are not users. And a lot of this industry mixes that up. I see charts go viral all the time saying monthly active users and then comparing that to like, other tech or TradFi. These are not verifiable users. They are just wallets. I can have 10 wallets. I can have 100 wallets. I can have 1,000 million wallets. And in fact, many do. And so you need to take this number with a grain of salt and look at it directionally. There is not actually 14 million people using Solana, not even close. There is much, much less. Maybe it's not even a million. I don't know the error here, but it is nowhere near that. And so that's the first thing to understand. The second thing is just looking at these trends. There are some really, really cool trends in this chart. If you're looking at this, Solana started out in what looks like 5th place, but I think it's actually much lower than that. This is just showing the top 5 currently. So it was maybe 10th or 15th. And it has just done amazing this year to get up to basically the number 1 spot, which was pretty cool to see. And so that's pretty impressive. The other thing to note here is we are missing one, and it is one that's not the biggest, but one of the biggest, and that's Ethereum and its ecosystem. The reason that we don't see Ethereum or any L2s on here is because their users are fragmented, right? So Ethereum has a certain amount of users, and then Base, and then Optimism, and then Arbitrum, etc. But really, when you're thinking about the economic value of Ethereum, its entire ecosystem. And so what you need to do is take Ethereum plus all the users on its L2, right? And combine them, and it would be up here in this level as well. I think it is, last I checked, somewhere around maybe 8 or 9 million. So it would be probably, well, I guess Polygon is fourth. So if you want to count Polygon, maybe you don't, but it's somewhere around 8 to plus million. So it should be in here as well. So those are kind of the key things I'm looking at. Tron doing really, really well, which is impressive. And that's just because it has stable coins. And so it's just done well through the bear market, through the bull market. And then the one thing is Bitcoin. Bitcoin started out at second at the beginning of this year, and it is now in fifth at 7.7 million, starting at almost 13 million. So that's interesting. I think that's probably because of ordinals and runes, which they've had kind of some hype around. It could also be because the ETFs are approved, and so more people don't need to use on-chain anymore. They can just buy their assets on-chain, or sorry, in the ETF, and do that in tax-free savings accounts. So maybe less people are actually going on-chain as a result. Don't know. That's just a thesis. It's just my opinion. But the clear winner here is Solana, just absolutely crushing it. That chart's pretty wild. They went from 3 million monthly actives to 14 in a matter of 6 months. That's incredible.
Well, speaking about Solana, this next chart's really going to blow your mind. Let's go to weekly transactions. I've got the chart up here with weekly transactions. And basically, if you're looking at this chart, all you can see is Solana, because Solana leads the way with 1.8 billion weekly transactions currently. The next closest is Tron with 47 million. And then we have a bunch more under that. So we're going to actually look at this in two charts, Kai. First, let's look at it with Solana, because you can't even see the rest. And then I'll pull up the next chart where we can see the next top 4 chains. What do you see when you think about Solana and having so many weekly transactions?
Solana literally is in a league of its own. And I don't know that the industry has really kind of wrapped their heads around this yet. People complain about sometimes transactions don't go through on Solana. And it's like, look at the problem that Solana has versus everyone else. And you can call it a problem, or maybe it's not a problem. I don't know. But the fact that they are 1.8 billion, whereas the next highest is 47 million, it is literally orders of magnitude bigger. And so, yeah, if it has a couple problems, approving transactions or getting transactions through, I think we can give it a little bit of leeway because of how many more transactions it's actually doing here. It's unbelievable. And it's doing it while keeping fees extremely, extremely low. So in terms of the tech, this just tells you like Solana has something here. And look, what are these transactions? We don't know. A lot of them are bullshit transactions. They are a lot of bots that are trying to arbitrage. And so a big bulk of these transactions actually don't go through. And so you got to, yes, it's not actually 1 point, whatever it is, 8 billion transactions in the week, but the fact that it can process so many and it's still this far ahead, there's something there. The fact that people actually want to arbitrage on that chain shows there's value there, shows there's something to do there, right? If you could arbitrage and make money on any chain, they would do that, but they're not. They're doing it on Solana because that's where the opportunity is. And so there's economic value there. And so people are doing a lot of activity on that chain. It's also meme coins, AI, DPIN, like all the things that you can't do on most other chains, they're happening on Solana. So it's just light years ahead of everyone else.
Yeah, if you want to hear deeper of Kyle's thoughts and his thesis around his bull case for the Solana investment right now, we have a past episode not too long ago where we make a prediction for the price of Solana going to 1K, why we think it's going to get there, as well as talking about blinks. But that's not the only news that came out about Solana recently. Kai, they just hit an all-time high in monthly economic value with over 90 million cashed in June alone. Make sure you check out our newsletter to read about that. So if you're not subscribed to our newsletter, make sure you do. Okay, let's go to the rest of the chains in weekly transaction volume. Kai, when we look at the rest of the trains, we have Tron at 47 million, Ton, it's so tough to say those side by side, Ton, the open network, at 34 million, Polygon at 29 million, and BNB chain at 23 million. What do you notice when you look at this?
Tron has just had a steady incline and has been doing this for a long time. And that's because they have a lot of USDT. And so they're basically the stablecoin chain, and they're really big in Asia. For those that are in the US, you're like, who uses Tron? Like, no one uses Tron. What are you talking about? And it's mainly Asia and South America, and they are using it for stablecoins. And we believe stablecoins is probably one of the biggest use cases currently in crypto and will be for a long time. And so, hey, whatever you think of Tron doesn't really matter. It's getting used, and there's a lot of people just moving stablecoins, which is great to see. The other big number here is TON. TON basically went from zero. It's not actually zero. It looks like on this chart, but last place, let's call it, from all the L1s to basically third place for transactions. And that is a massive, massive jump. Why? Distribution. It's connected in with Telegram, and so it's got the distribution. And even if it doesn't have the best tech, right? It doesn't have the best community. It hasn't been around the longest. It doesn't matter. It's when a blockchain can get distribution in some way or another, it can perform well. And that's what TON has done. And they have been one of the talks of the year as a result of that. Base is the other one. Base is brand new. They've been around for a year, and yet they have tons of adoption compared to all the other layer twos. And again, it's because of adoption, because of Coinbase. And so I think TON wasn't on a lot of people's radars last year. It needs to be this time around, because you can see transactions went from, I don't know what the number is. It's so small that you can't see in January.
2.5 million.
Is it 2.5 million? Yeah, 2.5 million all the way up to 35 million in a matter of 6 months. It's incredible growth.
When you look at Tron, and you mentioned stablecoin investing, and we talked recently on an episode about stablecoins being a sector that we are very bullish on. Currently around 6% of total crypto market cap is stablecoins. We believe that's going to go up considerably over the next 18 months. Is Tron where you're allocating your capital if you want to invest in stablecoins?
So I don't, not because of I don't like Tron or something. I just don't use Tron. It's not in my area, and so I don't understand it enough. One of the things I think when you're making investments is you should use that application or that protocol. And Tron for me is just not something that is, I mean, sure, it's accessible. It just doesn't make sense for me to use. If I'm going to use stable coins, I'm probably going to use Base or maybe Solana. So I don't. But when we actually put out a pro report on stable coins and how to capitalize on the opportunity, and there was, I mean, we said Maker, we said Athena, of course, we talked a ton about those, but there's also the blockchains that are going to be settling those transactions. We know stablecoins are going to be the future. Whichever blockchain is the home for and the real estate for the stablecoin transactions and users, it's probably going to do really well. A blockchain doesn't need any other use cases to work other than just stablecoins. Although if it has stablecoins, it's probably going to get more of DeFi, right? It's going to get a way to lend. It's going to get a way to do leverage, et cetera, et cetera. And so any chain that's starting to get adoption from stablecoins is a good ground to build other things on. And so, yeah, I think Tron is great. Solana is great. ETH is great, all to get exposure to the trend of stablecoins.
Awesome. Okay, let's go over to the third chart, which is decentralized exchange trading volume. That's DEX trading volume. When we look at this, we've got Ethereum leading the way, 11.5 billion, followed closely by Solana, which is gaining on Ethereum at almost 8 billion. And then we've got Arbitrum, BNB, and Base all pretty close together, ranging from 3.5 to 2.5 billion. Kai, what stands out to you in this chart?
The biggest standout is Base, going from basically zero once again to becoming one of the top 5 in the entire space. So that's obviously a big signal to what Base is doing, to what layer 2s are doing. I mean, you've got 2 of them here in the top 5 of all chains. So I think that's quite interesting. Ethereum has the liquidity, so it's just been number 1 for forever. And then Solana, obviously, this mainly has to do with meme coins, is why their DEX volume has gone up so much. So that's great. Is that sustainable? I'm not sure. Solana has a lot less liquidity. I think TVL might be one of the things we're going to look at here today, but you need liquidity to have a lot of volumes. And so you want to see volume because that means people are actually trading assets and doing things on chain. And so the Ethereum ecosystem really crushing it here, because you got to remember Base and Arbitrum, those trading volumes are great for Base and Arbitrum, but where does that really end up settling all those transactions? Over on Ethereum. And so the fact that Ethereum is there and plus 2 of its siblings, let's call it, are there as well, it's a pretty big deal for the Ethereum ecosystem.
Does Ethereum continue to gain here over time in your mind, or does most of this move to the L2s?
Most of it'll move to the L2s. I mean, there is a lot of liquidity on Ethereum, and like whales will move that. So in terms of volumes, they'll do well. It will not do well in terms of users and transactions, but maybe, big whales are moving around hundreds of millions or billions of dollars, which doesn't happen on Solana very often. And so it might keep pace. Let's see. I don't know. But I think once we have millions and millions and millions of people doing every sort of transaction on here, I would say Ethereum falls behind, but it's okay because it's about the Ethereum ecosystem. Like really, we should be adding these together. And you would see kind of like how Solana dominates on transactions, the Ethereum ecosystem dominates on volume. And so really we should be doing that. The other thing to notice is BNB has been on every single chart we've showed so far, I think, except for maybe one. And no one really talks about it. It's performed well this year. Again, I don't think BNB is necessarily a sustainable thing. It's kind of like a test hub for Ethereum, let's call it, in the Ethereum ecosystem. But BNB has distribution, right? It has Binance, the biggest ecosystem in the world, and they have built their app, their centralized exchange, to push users onto BNB. And so as a result, it's done well. I just don't like BNB because it has like 20 validators. And so it's very centralized as the blockchain. And now that could change. Who knows? Maybe that will change, but that's just why I haven't invested in it. But I mean, hey, it does well in all the metrics.
You mentioned total value lock, Kai. That's actually the chart we're going to look at next. And why are we going to look at that? Well, because liquidity is so important, because you need liquidity in order to have more liquidity and grow. So when we look at this, this is incredible. Ethereum leads with 61% of all total value locked. And the next closest is Tron at 8%, BCS at 5%, Solana 4.1%, Arbitrum 3%, and the list goes on. What do you notice in this chart, Kai?
Yeah, there's 3 L2s back to back there. So it's Arbitrum, Blast, Base, which is quite interesting. Look, liquidity is an important metric. It shows you kind of like the trust, right? The more money on a blockchain means there's more people that actually trust it. Maybe it's less risk, I would say, potentially. But ultimately, you want that money actually moving, right? You want that money doing things. And so I take this metric with a grain of salt. The other thing is, like, if you think of Arbitrum and Blast, for example, when they launch their own token, that then counts as TVL on their chain, whereas something like ETH does not do that. And so it's a bit weird when you're measuring L2s versus L1s. But regardless, seeing a lot of liquidity is no doubt a good sign. As I said, layer 2s, they can sort of manipulate that by counting their token in there. It depends on the way that the platform is going to calculate it. But either way, as you said, more liquidity, baguettes, more liquidity. And so if there's lots of money on there, it means that when institutions come in, they go, oh, there's already, $80 billion on that thing. Well, I don't mind putting $1 billion on there, right? Because obviously there's some trust there. So it does matter for sure.
All right. And then last up, we're going to look at fees broken down by chain. And why are fees so important? Well, transaction fees are obviously a big part of the revenue stream for each of these chains. And this is the fundamentals that we love to see here at Milk Road. When we look at fees, we've got Ethereum absolutely dominating, leading the way, almost 1.7 billion in fees. Tron next up around just below 800 million. Bitcoin, 700 million. Solana, 250 million. BNB next up with about 100 million, and then a whole bunch way down low. Kai, what do you notice when you look at this?
Yeah, and by the way, these numbers are over the last 6 months. It's not like a monthly or a weekly number. These are over the last 6 months. Fees is a tricky one, and there's a lot of people that view this very, very differently. In one sense, as you said, you get revenue, and so revenue matters. Revenue matters actually when you do something with that revenue. In Ethereum's case, they burn half of this, if not more than half of this. So that matters. That's making the token deflationary. In Bitcoin's world, they don't burn any of it. And so that revenue is actually not revenue. It's actually an expense because it makes that money and then it goes to a miner and then the miner sells it to pay for the electricity. So is that actually good revenue? Not really, right? Now, for security, it could be a good thing because they can actually turn off issuance and their inflation that they have, and then miners can continue to like exist. So like it depends on kind of how you're looking at it. The other thing is like, yeah, Ethereum's making a ton of money. So, okay, that's bullish in terms of revenue. But that also means that, at least in Ethereum's case, the users are paying a lot on gas fees, and maybe that's not sustainable, which is why they've created layer 2s. So like you really need to look at this one very differently. What I really like to see here is Solana, for example, which is gaining revenue. And if only we were showing the monthly, on a monthly basis this year, Solana's trajectory is doing really, really well. Their fees in terms of the revenue they're making is going up and up and up. Yet the fees that they're charging to users is staying about the same. Now that's what you want to see. Ethereum, for example, though, makes a lot of revenue, except typically in that instance, it's users then, it breaks UX, right? Because it's users have to pay more. Now, Ethereum's fixing this through L2s. So eventually you'll start to see L2s starting to creep its way up here. I'm not sure if this chart actually includes L2s. It looks like maybe it's only L1s. But if you included L2s, you would start to see them creeping up because they're actually making a ton of revenue while keeping it cheap for users and then bringing that revenue back to Ethereum. So again, you want to think about what's the business model here. And yes, of course, a business model is great when it's making revenue. But if it's going to get underpriced, then you know that it's probably going to be a problem in the future. This is how you see it in the real world. So you need to think about that too. So a lot of ETH maxis really love the revenues. I do too. And I definitely love the burns that's happening on ETH, but you got to think more long term. And so thankfully, ETH has its solution with layer 2s, which aren't shown here. Again, Solana doing really, really good in terms of its growth. Bitcoin, I don't know. Who knows what they're going to do? They need a lot more revenues for it to make sense. But again, they don't have a solution because that's going to make it more expensive for users. So it's a weird world when you're looking at revenues in terms of blockchains. When you're looking at application tokens, which we're not here, but when you're looking at apps like Maker, et cetera, revenues everything. That's all you want to look at, right? It's a bit different here in blockchains because we're trying to build ecosystems where it's affordable for apps to actually live on and bring on billions of users. And so there's a lot of just dynamics at play here, and you need to think through these more comprehensive. And the other thing I didn't even mention is you had mentioned that Solana is at an all-time high in terms of revenue, but that is economic value, which is transaction fees plus MEV. You got to also think that there's more ways than one for a blockchain or the validators of blockchain to make money. It's not just about the transaction fees. There's other ways that it can make money. And so this doesn't take that into account either. So again, you got to look at data. You analyze it, take what you can get from it, but think about what it's missing as well. And that is the key to analyzing on-chain data, which most people are not doing. So if you can do that, you really get an upper hand on the market and you can start to make investments accordingly.
Speaking about what's missing, we want to know what you guys feel like you're missing from us. Is there anything you want us to talk more about on the show? Any feedback you have from these charts? Anything you guys want us to dive deeper into? Make sure you comment on YouTube or reply to our newsletter in any way, or just DM Kyle on Twitter at Kyle Reidhead. He'd love to hear you. All right. Send him a DM or DM myself at 0xJ Hamilton. We want to make sure that we keep you guys informed so that you feel fucking awesome about your investments, because while the rest of the market is bears right now, we ain't no bears around here. We are bullish and we are feeling good about the next 18 months, and you guys should be too. So hopefully you are. Kai, any final thoughts before we let you go?
Final thoughts are very, very bullish on markets right now, although I know the rest of the world is not. I think Solana and ETH are about to go absolutely crazy. Solana just looks like it's so ready to rip. Lark and I talked about this a little bit yesterday when you were off. And then the other L1 that I'm sort of looking at right now is TON. We just did a pro report on them, I think maybe 2 weeks ago now. As I said earlier in the show, distribution matters. And if TON can continue to figure out how to get that distribution from Telegram, it's a really, really big deal. People don't realize, like when you think about these numbers again, these monthly active, and it said users, but it means wallets. It's so small, 14 million wallets. And actually that means like 1, 2, maybe 3 million users, like real people. It's so small. And so when any platform can all of a sudden bring on actually millions of people, I don't think people realize what that's going to do for this industry and what that's going to do for that blockchain. And so you need to be paying attention. And TON literally overnight could bring on 10, 20, 30, 40, 50, whatever million people on chain. And that is going to just be a game changer for this world and for the crypto world. But it's not just TON. Others could do that. Maybe an L2 or maybe Solana gets some sort of partnership that you just couldn't think of. And when that happens, and it's going to happen, and maybe it's this cycle, maybe it's not, it's going to be a game changer, and it's going to make all these charts that we just looked at look like crap. So be prepared.
And why can TON do that? Well, because TON is one of the biggest apps in the world with over 900 million monthly active users.
Telegram, not TON.
Did I say TON? I meant Telegram. Yeah, Telegram, definitely not TON. Nobody's got 900 million active users in blockchain yet. Not yet, but it's coming. But make sure you go back. We got a great episode with Alina, the head of ecosystem at TON, where we break down their numbers and talk about, is it sustainable? Is it not? What is driving these early growth numbers? So you're going to want to do that if you're going to listen to TON, and you're going to want to pay attention for the upcoming pro report. Kai, thanks so much for joining us again today. In case you missed it, here's what else happened in crypto news today. But first, I wanted to give a quick shout out to our partner, Agoric, who's building a world where your crypto apps work together seamlessly, just like your favorite Web2 apps. No more walled gardens, just smooth sailing across the decentralized web. All of that, and only using JavaScript. That's the future Agoric is building. The team just announced their early access program. So please head over to agoric.com/EAP and join today to start orchestrating the future of wealth in Web3. Now, what happened in news was, first up, Perth-based DigitalX has received the green light to list its spot Bitcoin ETF on the ASX, that's the Australian Stock Exchange. This makes it the second spot Bitcoin ETF available on the exchange following VanEck's debut in June. Trading is set to begin this Thursday. That means Aussie investors will soon have another regulated avenue to gain direct exposure to Bitcoin without needing to directly hold their cryptocurrency. Although I'm sure if you're listening to this show, you're holding it yourself in a hardware wallet, I hope, because that's the way to do it. Also, What else happened is TON. We've talked about TON a bunch on today's show. Well, TON is launching a new layer 2 network called TON Applications Chain. That's TAC for short. This new protocol aims to address scalability and efficiency for decentralized applications built on TON. The twist, they're building it using Polygon's tech. Specifically, TAC will leverage Polygon's chain development kit, that's Polygon CDK, and their egg layer interoperability solution. Why Polygon? Well, TON cites Polygon's EVM compatibility, strong developer community, and readily available liquidity as key factors. That's it for today, folks. Thanks for listening in. Have a wicked awesome day.
Thank you for listening to Milk Road Radio, the easiest path to get smarter about crypto. If you like this episode, share it and hit subscribe or follow so you don't miss out on the next one. There's also a link in the description to our free 5-minute daily newsletter where we simplify crypto for you while making you laugh. And if you're willing to step up your crypto investing game, then we'll leave a link to Milk Road Pro as well, your #1 resource to help you invest successfully in crypto. One final note, this podcast is for educational purposes only, and nothing we say is financial advice. Crypto is risky, so you should never invest more than you're willing to lose. Thank you, friends, and we'll see you in the next one.